Welcome, everyone. We're here to talk today about the concept of investing in music. My name is Alan Bargfried. I'm with Berklee College of Music. I also run an investment fund in music called Blue Tile Media Partners. And I'm here joined with three great people to talk about the subject. I'll let you maybe each do a quick intro.
Good afternoon, everybody. My name is Blair McLaren. I'm a partner in Active Venture Partners, a venture capital management company investing in digital and technology companies. We are international focused, European focused, but our headquarters are in Barcelona in Spain. We have presence in Scandinavia and in Germany. We typically invest in startup businesses, so anything from seed companies through to B rounds. Thank you very much for inviting me along today.
Good afternoon, my name is Paul Bedford. I'm a Senior Investment Director at Ingenious Media. I think Genius is quite unique in the UK in that it media investment, but it focuses both upon high-level, big-ticket venture capital investment, but also we've run individual artist funds to invest in, right down to the level of investing in individual artists.
Hi, everybody. It's a pleasure to be here. My name is Monica Doty, and I'm a managing director for the Women's Venture Capital Fund. You can reach me at monica@womensvcfund.com. And I'm based in Los Angeles. We focus on investing in early stage companies in digital media with gender diverse management teams. My background has mostly been as an entrepreneur. My claim to fame in this circle is I was founder of MTV Music Television Europe, where I ran the whole business side of things in the early days of rock and roll. And I have to say I suffer from a little bit of deafness as a result of that. But it's a pleasure to be here.
I'm good. With that magic headset. So let's kick things off. Let's talk just a little bit about the concept of investing in music as a whole. Perhaps looking at more traditional VC investments. I know a couple of you are focused on that, and Paul, you're doing some of that as well. What does a company or an artist need to do in order to prepare themselves for the investment steps, and how do they decide what avenue to take? I mean, there are a lot of different types of investing in music, and we'll talk about some of them, but just once you realize that perhaps you need an investment, whether that's peer-to-peer lending or crowdfunding or VC, how should a company make that decision, and how do they prepare themselves?
I think, like all investments, music is a particular focus for investors. Some investors will invest in music alongside other sectors, and some investors are looking purely for music investments. So I think it's important that the artist or the entrepreneur understands who they're speaking to. I think it's always about identifying which investors are the ones likely to invest in my company, and getting it. I would say there's a lot about networking in the sense of speaking to people, understanding opinions, understanding what people are looking for, because different investors will look for different things. So Monica's fund will be different from my fund's profile, either by geography, by sector, by gender profile of the management teams. So there is a bit of research that goes into doing that. And it's also about not turning up on day one and expecting to get everybody on board on day two. Normally there's a bit of relationship building that goes into it, speaking to funds, getting a relationship going with a view to coming back and saying, look, this is where I now am and this is where I want to be. So there is a process behind it. I always consider venture capital and investment as a people business. We're investing in people, you're taking on a person as an investor in your company and your project and the opportunity you're presenting. So that click, that connection is very important, both from an entrepreneur point of view and from an investor point of view.
I'll jump in since I have the mic. I would look at it from two regards, whether it's a company or an artist. From a company standpoint, I always tell entrepreneurs that if you're looking for outside capital, because you don't necessarily need outside capital to be considered an entrepreneur, but if you are bringing in venture capital money, you have to be ready, to be prepared to exit. That's the only way the venture capitalists earn their return. I'm investing other people's money. It's my fiduciary duty to look after their investment dollars. And the only way the VCs get a return is by the company realizing an exit. And there's only two ways to get an exit. It's either being acquired by another company, Google acquiring you for talent, technology, geography, customer base for various reasons, or you go public. And so if you're not willing to let go of your baby, that is often, right at the get-go, you have to be prepared for that. However, on the artist side, that's kind of a different business model as far as I'm concerned, because you're dealing with assets that are evergreen with recurring revenue. And you may or may not want venture capital per se. You may want investment dollars, and oftentimes investors will be looking at it for this continuing revenue stream, this continuing ability to not only earn revenue on assets, but also the ability to buy and sell those assets and build libraries. There's no doubt that the music industry has gone through tremendous change and is still going through a lot of tremendous change. I don't think anybody really has the answers of which direction it's going. There's the 300-pound gorilla in the room, namely iTunes, that's affected how artists typically made money, and I think it's open for a lot of discussion as far as where it's going.
I think the 2 points that I would emphasise, one, to take Blair's point, is it's definitely all about people, and I think it's about surrounding yourself with the right people. The second thing is to identify exactly what sort of funding you want. I've seen an awful lot of people who have gone straight into the VC route where it just didn't fit them, and you need to be very aware of what you're doing. Certainly in the UK, since the banks have failed, there are an awful lot of opportunities now, crowdfunding, peer-to-peer lending. There are all sorts of opportunities popping up that fit better a lot of the businesses that, some people just want a bit of cash flow to see them through a situation, and that's not, you don't go down the full-blown VC route for that. That's exactly the wrong thing to do. I think what we've always said, and I'd like to think everybody here would say is, have a cup of coffee with somebody, have a cup of coffee with an advisor. We're happy to sit anybody down and have a chat with them for half an hour, try and understand their business. We certainly took it further. The two big successes we've had at Ingenious that I've certainly supervised are 19 Entertainment and Cream. We spent weeks with those companies before we invested, doing a business plan with them, because actually their finances were in pretty poor state, but when we got around a table, we realised there was a lot of creativity within that room, and I think nurturing that creativity and taking a bit more time over it before you leap in, making sure you've got a plan that's in place that makes sense to somebody. And ideally, if you can do that with the people who are ultimately looking to invest in your business, then so much the better, because they will gain full buy-in to the opportunity. So it's really take your time before you leap into this stuff, and just make sure you've got the right. It's not a one-size-fits-all here. It's make sure you've got the right funding to surface your needs.
Aside from actually deciding where to look for the funding, what else can an artist or a company or anyone who's looking for investment do to prepare themselves? What are you guys looking for, and what steps does an artist or a company, and we're kind of talking about two different things here, but how do they prepare themselves? So, a digital media company, how should they best prepare themselves? They talk to people perhaps, but how else? What else are you looking for, and how else can they be prepared so that when they talk to you, they have the right pitch?
Yeah, I think from our point of view, it's about understanding what are the core competences that the business needs in order to be successful, and the team has to have covered those core competences in our case. So it's okay to add on to the side of that core team, let's say different profiles that are missing, and complement the team or change the profiles over time for more experience. But at that moment when they come to us, I would say it's about having a complementary team who can support each other around the key elements of their business. So whether that's marketing, online marketing, if it's a B2C play, for example, or if it's a B2B play, perhaps a senior sales guy who's done it before. And then from there, it's understanding the business and what's happening. But I think the team, everyone talks about the team being the most important thing. I would say it's one of the most important things, a complementary team, but also the opportunity that's been presented. You know, what are they going to do with this expertise that they've brought together? And it's about understanding, do I share that vision that these guys have? Is that opportunity that you're coming to me and you're saying, this is what I want to do? I believe you. I believe you. I believe you're going to be successful with that, and I'll take it forward on that basis. But I think it's about making sure that the key positions are covered.
Yeah, I'd like to add to that. I can't tell you the number of business plans that we see that come through the pike where you may have the intellectual property, the engineer, the creative, even the financial person, but oftentimes they fail to have a sales and marketing person. It's almost as if they poo-poo the suit who's going to go off and close the deals and negotiate the contracts and, do strategic partnerships. And I think it's critical, the earlier the better, to have that well-rounded team. I do agree, because they need to be part of growing the company. And to add to what you said also is that I go through this sort of criteria list right at the get-go. So, for example, what's the total addressable market? How big is the market? Who is your market? How scalable is it? How capital efficient? How much money is it going to take to break even? What are your underlying assumptions? How are you going to, differentiate yourself from your competition? Who is your competition, direct and indirect? I think these are all considerations that, when you have the cup of coffee, that they should be able to answer as it is their business, and whether or not they get outside capital, it's just important considerations.
I mean, if I take the artist example, for instance, we would never back an artist unless they are surrounding themselves with the right team. And I guess from that perspective, it certainly means a good, strong manager. It certainly means a good agent. It certainly means, in most cases, a label. We don't try and do A&R. That's not our job. It's somebody else's job to do A&R. They need to come to us and say, here is a team of people that, and then, as Blair says, you have to gain a belief. You need to talk to that team, and you gain a belief that they have a vision for where they're going to take this artist on the road. It's different in larger venture capital, but I think focusing on the artist side of things, that's about surround yourself with the right people. And in the end, all of this stuff comes down to surrounding yourself with the right people. And I think you're absolutely right that 9 times out of 10, somebody walks in the room and there is a key component missing. They've covered themselves on X, Y, and Z, but A is missing, and it's like, how the hell are you going to? You've done all of that bit, but you haven't got the key component that is going to make your business differentiate itself from others and make it successful.
So, can you give us maybe an example, Paul, just a little bit about an artist investment and how you might structure that, or how? Because if they're coming to you with an existing label that's maybe put some money in them already, they've got a manager, a team in place, maybe you can give us a little bit of an example just how
Sure. Well, the funds we've put together were very much about, and we were approached by either label, artist, or on the rare occasion an agent, but it tends to be either the manager or the label coming to you and saying, I've got an artist, I have a belief. And we'd sit down, go through the plan, understand what the plan is. I mean, some of the examples, the things that we backed the previous Prodigy album when it became the biggest selling independent album in Europe. The problem is, in those days, everybody makes a bit of money, and that's a struggle with this game at the moment, is understanding exactly how the revenue streams are coming. I do think there are some green shoots of recovery coming, and I think we're entering a phase where I think it will be easier to persuade people to invest in music. But they would come to us with a plan, with the manager would bring the label along, or the label would bring the manager along. You'd sit down with them and go, right, how are you going to make this artist work? We did the previous Passenger album before Passenger broke. Tim and David at IE were convinced that Passenger was going to be a huge, huge star. Unfortunately, when we invested, he wasn't, and it didn't quite make it. And the big song was, you need to get lucky at this game as well. You need that moment in time But you're not going to get that moment in time unless you're in the game. So we did the Passenger album that failed, and of course Network came along and picked Passenger up and have made a huge success out of it. So it's the ones that got away. We also failed to invest in Jessie J because internally we decided that we didn't think that there was enough ability there. And it was a classic case of us doing A&R when we should not have been doing A&R, and trying to convince ourselves that something, it's really finding people who have the experience to tell you that this is going to work and here's how I'm going to make it work.
So we've touched on it a little bit, and I think there's somewhat of an elephant in the room here, which is, the music industry has had challenges for the past 10 or 15 years. How willing are investors to getting involved in an industry that doesn't really have the greatest public perception right now? I think you're right. I think we're at a turning point. Things are kind of turning around, but maybe from a traditional VC perspective, are you super interested in music? Does the music thing make you a little more wary, or how do you approach it? Or maybe you don't approach it any differently.
Well, I'll jump in on the company side because that's our focus. It's really interesting to see how artists are making money these days that go beyond sort of the traditional, whether it's with video games or feature films or concert tours, Coachella. There's certainly a lot more of a myriad of revenue streams that are coming through for a song or an album or an artist's repertoire. But what's really interesting too is the technologies behind the music industry, and we've seen some incredible innovation that's coming through that makes it very interesting to support early stage companies because it's largely ignored by traditional investors, my experience in the States. So, one company we're looking at is called ejamming.com that allows live online jamming from wherever you are in the world without any audio delay. The chief engineer comes from Walt Disney Imagineering. They have about 10 or 12 different patents. The key issue is execution and how to bring it to market. But there's no doubt there's just so many different ways that you can slice and dice this technology, both for extremely well-known artists as well as up-and-coming students and everything sort of in between, and for video games and all that sort of stuff. So it's just really interesting to see how the technology's evolving.
Yeah, excuse me. I think that in our case, we're not put off because the word music appears in an investment proposal. I think, as we touched upon earlier when we were discussing before coming on the stage, I think the investing in artists is quite a hit or miss game. So you can have big successes and you can have big zeros. So depending on the investor profile, that's something that can be attractive or not, and it's very much a risk management game. I think the sector is still a massive sector. I mean, it's still a very large part of everybody's daily life, the consumption of music as a media. But I think the traditional VCs are tending to look at more, let's say, the non-artist related investment opportunities. So looking at the technologies, about distribution, about social networks around the space, etc. No, I mean, so for me, I would find it difficult to invest in an artist because of the 0-1 binary game. But anything around the music industry and disrupting that industry or taking advantage of opportunities that the new technologies are allowing now, that's something that's still very exciting for VCs. And we've seen big European success stories playing to that side. And I think there will be more. And I think that's what keeps VCs looking at the sector and saying, look, this has happened before, it will happen again. We just don't know how, but it will happen again.
In all honesty, I'm having huge internal battles to persuade people to stay in the music game or direct investment into artists, certainly. And I think it is that word music, and I think sadly, the word music is seen in the investment game as a negative at the moment. But it's up to those of us who still believe, and I do believe that there is. I think there is a period coming when music will again become investable. Just to let you know, what we did around about 2010 was we moved our focus away from direct artist investment, realised that where most of the artists are making money is on the live side, and we've created a very, very successful live investment division. I'm actually the head of live and music. I used to be the head of music and live. I'm now the head of live and music. I've even over-reinvented myself. And we invest in festivals, and we realise that there is a huge opportunity there, and our new festival vehicle is going very, very well. But I'm desperate to get us. I'm hanging in there by my fingernails to say, look, there is still the opportunity to invest in artists, because I think it is a very binary business. You're absolutely right, but where you get it right, then the returns are huge. And as long as the investors who are coming in understand the risk and reward profile of what they're doing, then that's fine. There are investors out there who are happy to take that risk as long as they can see the upside potential. So for us, it's just about matching investment with the risk and reward profile.
I'd also like to add something too. Just putting on more of an angel investor hat rather than this traditional VC where I mentioned that, we're investing other people's money. There's a certain rigor and discipline that's involved in terms of covering your fiduciary duty for your investors. But there's no doubt that there's a lot of interest, I think, and it's growing from the angel investor community, individuals that, whether they're investing in the internet or social media or music, there's certainly a lot of capital out there, especially given the fact that, the returns on traditional investments, stocks and bonds, have been really low. And so those that certainly have a love and a keen ear can be very, very supportive of up-and-coming artists and even established artists. In Hollywood, there's a very robust business in terms of catalogs and evergreen music, and really investing in different ways to exploit an artist's repertoire, whether it's through media, social media, video games. Now it's not sort of the one revenue stream where you have an album and then you can live off that album over several generations of your family. And now you've got to be kind of smart on the street and be getting your hands a lot more dirty as an artist. But between angel investors, crowdfunding, there's certainly capital out there with which to support somebody with talent, I think.
So,
sorry, I'm just going to add on to that. I mean, I think what we see is that even if we look at music technology companies or digital media companies in general, they often get financing. They often are able to raise financing, just perhaps from not the big VCs, but maybe the mid-tier or the smaller VCs or business angels. But actually many companies raise financing which is not VC-backed. So you don't hear quite so much about it, maybe because they don't make such PR, etc. But many companies who we said no to raise other rounds, and some of them have become very successful and we missed an opportunity, and others more or less grew, but maybe not quite as what we were expecting. So I think it's about getting that investor who really believes in you or the idea, and that could be one person out of 1 million, or it could be hundreds of people out of 1,000, depending on how you connect and what your idea looks like. So don't give up. I mean, generally there's always an investor who will back you. It's just more difficult to find depending on how many there are.
So one of the things that we've looked at Berkeley, and we had a panel about it earlier today, was the role of cryptocurrencies and blockchain as evolving technology and the role that could play in the music industry. I know just personally, because of our investigation into that, I've had a lot of startups reach out to me that are involved in this space. I'm wondering if you're seeing any of these types of investments come across your desk yet, kind of what your thoughts are on blockchain as a technology for the music industry. And for those of you who are not aware, blockchain is a decentralized ledger that allows payments to be made at source very quickly and it powers Bitcoin, which is the cryptocurrency. And many of the banks right now are investigating. I think in the US, 9 major banks just put $120 million into a research project to look at how blockchain can impact financial transactions. But I'm curious if you've seen any of this come across your desk yet.
To be honest, no. I think there is a lot that I would say there's a lot being discussed at the moment. I think what's not clear is how that will translate into a business model and what sort of business ideas can be built around that technology. Whether it's the oil of a cog around a different business model, or whether it can be built as a core of a business model itself. So I think it's still in its infancy as a technology, which allows great opportunities for VCs to back if they're into that sort of big bet, early stage technology. But I think there's a lot to come, whether that be over the next 12 months, 18 months, or 5 years. I think it will evolve into something that will be important.
Yeah, I'll jump in here. Yeah, I agree. I kind of think people invest in what they're comfortable with. That kind of gets to why we started the Women's Venture Capital Fund parenthetically, because less than 4% of venture capital goes to teams that have one woman. And that's largely because people invest in people that are like themselves. So related to Bitcoin, I don't invest in stuff that I really don't use or I don't understand. I'm rather simple in that regard, and we'll see if it takes off, but it's not really in my sphere of influence or interest.
Okay.
Yeah, and our focus is even more narrowly defined, and we're very much about content. We're not about distribution channels or, who's going to win the game out of Spotify or anybody else is not our area of expertise. We will use them as a channel for distribution of the content, but that's all it is. But, there's no doubt that, this game is becoming more and more about micropayments and anything that can help to facilitate the payment process in the digital game must be for the good, I would have thought. So, I'm certainly supportive of it, whereas, but we don't know enough about it to be able to decide whether to back it or not.
Okay. What about some of the programs that exist here in Europe? I mean, we were talking earlier about the tax breaks that exist in the UK for investment into creative arts. There's some matching funds that are available from the EU for venture capital investing. What do you see as the role of that? Are you seeing those have a major impact on investing in music in Europe, or?
If I could start with the UK, I think there are some fantastic opportunities. I do think they're largely being wasted. And it's a bit frustrating. There is, for instance, a thing called Seed Enterprise Investment Scheme, which basically means you can raise up to £150,000, and the investors will get a tax break of 50%. So, and I think they can invest up to £100,000. So it means if you put £100,000 into a business, you get £50,000 back from the government. So you're only risking 50,000. Now, in theory, that's great and it's fantastic, but I think that money just seems to be that it's just been purely placed into high-risk businesses that seem to be largely failing. Nobody seems to be generating much of a return from that. And it's a bit frustrating that people aren't able to take advantage of these schemes. I think that I, for instance, have tried to talk to the PRS Foundation, who are also putting some funding into play, and say, can we not combine these two elements and create something that I think will give us a much longer term legacy? As I think in the UK it's all being wasted a bit, and it's very frustrating. And but the UK government is supportive of the concept of this being high risk, and are certainly willing to help along the way. So I cannot be critical of them. I think I know Canada has a good regime for supporting artists. The UK certainly is willing to, but as I say, I'm a little bit frustrated that I don't think we're making best use of it.
Yeah, I mean, I think Spain is rubbish for tax breaks for business angel investment in general. So it's one of the frustrations about investing in Spain, because business angels form a valuable part of the ecosystem. So anything to do to help them, to encourage, to support early stage businesses, helps to move them on to the next level where the funds or seeds funds or later stage funds can invest. So it's one of the, let's say, lobbying movements that's happening in Spain at the moment. I think on your other point about subsidies, grants, there are two ways of looking at it. One way is, well, if they don't have them, they have to work harder, and you essentially separate the good from the bad earlier on, and the ones that aren't going to survive don't survive. Or the other way is to look at it as actually, well, in ecosystems where perhaps there's not so much financing available from funds, such as maybe the US ecosystem is a lot more active in that sense, it allows ideas to get off the ground that maybe wouldn't have had the opportunity otherwise. And I sort of tend more, I guess, with my European hat on to think of the latter case. I think it does offer companies a way to leverage some early investment from business angels, from investors, but I've also seen many cases where it just keeps kind of companies going, which don't really have a long life ahead of them.
Just to add, I think my experience has mostly been with, what happened in Silicon Valley. The reason why it really took off in the 1970s was the Small Business Investment Corp, which matched venture capital funds 2 for 1. So investors, whether it be individuals or pension funds or insurance companies, your typical Wall Street investors that invested in venture funds benefited from this because they would put in, for example, a total of 100 million, and then you would get another 200 million that all you would have to do is pay back interest on it. And so it would, catapult the returns on investment for these investors, which catapulted Silicon Valley and really was the beginning of that ecosystem for Xerox, Microsoft, and so on and so forth. And I think the EU is doing the same sort of thing. However, that's really more on the technical side, and I often compare that to the difference between Silicon Valley and Hollywood, where there's definitely a cultural difference in terms of the appetite for risk. Those that invest in artists, music, films, creative assets are completely different than those that invest in technical companies and that are more engineering driven. So we're constantly between Los Angeles and San Francisco dealing with that very, very key difference. But when it comes together, it's lovely. And I think it would be great if there would be something similar, because there's no doubt that the returns on, A talent are very, very interesting, just from a purely financial standpoint. So supporting any sort of A talent, hoping that you identify them, but let's say 1 out of 10, which is a pretty good ratio. Let's say you've invested in 10 artists and 1 works out. That's about the same as Silicon Valley. A venture capital fund will invest, let's say, in 10 companies, and you're happy if 1 or 2 just really are the next Google. So if you invest in 10 different artists and the next one is the next Rolling Stones, everybody's happy. But we really don't have that in the United States, and a lot of it largely depends on the talent bubbling up to the top, and then it takes off on its own.
So let's talk maybe for a minute about what happens after you invest in an artist or a company. I know with our fund, we typically don't get that involved in the artist's career. We try to put them in touch with the right network. We give them some seed funding to get going, but we're not, holding their hand through a career-building process. I'm curious, and maybe Paul, you can kick off talking a little bit about, if you are investing in a festival, we talked about Bene Kassim, or if you're investing in an artist, what level of assistance are you giving them after you give them the money?
I do think we're certainly fairly unique in the UK in that we very much roll up our sleeves and get very involved, probably a bit too involved, some might argue. It was a long summer. We had 14 festivals last summer and it nearly killed us, to be honest with you. But I think the partners appreciate it. I think you get a lot more respect from them that you're rolling up your sleeve. We're not stand from a distance, and then the worst possible thing if you get the wrong form of funding is then somebody, something goes a little bit awry with the business plan, is a bit off track, and then suddenly somebody comes in and then tries to take your business over and tell you how to run it, and that inevitably ends in tears. So I think if you can keep a consistency in terms of understanding and getting enough feedback from a company and inputting into that company enough, as I say, you have to get the balance right. We've probably gone too far the other way, but there has to be, I think, a regular communication and rapport and understanding, and I think people appreciate the fact that, they certainly appreciate the fact that I have been an FD in a record company. So if I'm talking to artists or labels or anything like that, I've been there, seen it, done it. And I think that makes a huge difference for people. I think it does earn another level of respect in terms of if you tell them they shouldn't be doing that and they should be doing something else, then they will probably listen to you. They won't always ignore you half the time, but that's the way this game plays itself out. But at least you get that level of professional respect, I think. Just simply the fact that we turn up at every festival we're involved in, we're there, we will run a box office if we need to, we will do whatever needs to be done, I think is very much appreciated by the partners.
Blair.
Yeah, I mean, as far as on the company side rather than on the artist side, I think it's a lot about experience sharing. So understanding what experience you can share with the entrepreneur and how you can add value to the business. It's about introducing the right people, but we don't take operative positions in companies. So we won't be manning the box office. We won't be no exactly. So at a certain point, yes, we'll help prepare business plans or we'll help update the financials, but we won't be going knocking on doors and trying to grab clients for you. So it's about understanding where we can add the most value with the resources we have. The entrepreneurs know that when we start. Okay, these guys do this, this, and this. They can help me here, here, and here. In our case, maybe North to South Europe corridor is where we're strongest. So in the UK, you wouldn't come to us first. That doesn't fit well with what with our business. But if you're really interested in going to Scandinavia, Germany, Central Europe, and south of Europe, that's where we're strong. So we take a proactive approach, but not a day-to-day operational approach.
Yeah, I would build on that. As speaking on behalf of our fund, we focus more on companies, and I agree. If anything, we're on the board level, and decisions that are made on a strategic level would be very supportive. Talent, definitely, in terms of introductions for filling out the management team, or strategic partnerships that kind of, let's say we've got something going on in the States and maybe want something going on in Europe, we give Blair a call, so it's sort of actively involved with more of a long arm, because we are investing in the CEO. We're not the boss. The CEO is the boss. I have to oftentimes remind them that. I'm not the boss, you're the boss.
Maybe let's talk for just a couple of minutes about creative structure of investments, and then we'll go to maybe some questions from the audience. But have you guys seen any kind of particular structure that you find that's emerging, or something that you find that's maybe really working today? I mean, we've talked about all kinds, and there's a couple of different ways you can invest in music. You can invest in rights, you can invest in artists, or you can invest in companies. There's peer-to-peer lending, there's crowdfunding, but anything that you've seen that's been particularly intriguing?
I'll jump in here. One thing that we're actually looking at, and I'd be interested to hear what my fellow panelists have to say about this, is that there's certainly been a lot of reality programs. And it's taken off like wildfire. It's in America, we've got America's Got Talent, and I don't even remember half the name of the shows, and it's been replicated around the world. So there's this one company that we met who's actually doing quite well. They're not looking for funding anymore, but it's called Your Music. And they identify those artists that have, won these competitions, but they don't have a label. And I find it so funny that if I was really a music exec and really deep in the music industry, that would be one of the first wells I would go to draw water and identify those artists that have won these competitions, and really exploit it from a social media standpoint. And the capital cost and investment wouldn't be that much, so they're actually generating quite a lot of money, which is very interesting.
Well, actually, as I mentioned, one of our most successful investments was 19 Entertainment, and 19 obviously gave the world Pop Idol. American Idol was a unique phenomenon. I think I always remember the mistake Simon did was when we had the first UK version of it. We had 10 artists in the final, and he ended up signing 9 of them, and he realised that actually that isn't going to work. So. There has obviously been a filtering process on these reality shows. There are definitely artists that get away. There is absolutely no doubt about that. And I think certainly that is somewhere you can certainly keep an eye on that. And there is talent that is leaking through and is not being picked up. So, and a lot of marketing has been spent on that talent. It's the fact that you're on a TV screen week after week after week. Is a hell of a lot of marketing, which is one of the reasons we did the format in the first place, because we realised that the game that's changed so much over the years in this business is marketing. It's just become a completely different beast, and obviously TV at the time we identified, and obviously it's morphed online now. But I don't think there's any one particular. I think the exciting thing is there are different opportunities. People have realised that the banks have failed in their job, and therefore peer-to-peer lending. People are going, well, I've got money sitting in a bank doing absolutely nothing for me. Could I lend it to somebody who needs it and get a better return on it? I think that's a very exciting way forward. I think it's just said to the banks, stuck 2 fingers up the banks and gone, if you're not going to do it, we're actually going to get off our backsides and do it ourselves. And I think, I think people will get more creative about ways and means of funding. I think it's almost given people confidence to say, crowdfunding and peer-to-peer lending has given people confidence to say there are other means of accessing funds. And I think it feels like we could be entering into a very strong period for funding and finance. There's certainly venture capital funds burning a hole in people's pockets that they're keen to deploy. I've certainly seen in live a lot of funds in the UK. I know of 3 funds who have raised money with the intention of going into live. The problem they've encountered is that there aren't that many assets out there, so they're suddenly struggling. So I get back to content being king in this game, and it's an exciting time for somebody who's creating content. I think there's a huge opportunity for content creators to maximise the returns on that content.
I think I think your idea is almost like deal flow, no? So all venture capitalists, all investors want to see good investment opportunities, and we call that deal flow, no? So deals that come past our table and we look at, and depending on the asset you're looking for, whether it's an artist, whether it's a company, you want to see good investment opportunities. If you're a business angel, you might do that through investment clubs. If you're a VC, you might do that by going to events or creating a network of entrepreneurs who will pass you deals that they've seen in their travels. But it's all with the idea of filtering out the good ones, and investing in those good ones and leaving the bad ones behind. So it's any investor wants to get that high quality. But again, I think it's about okay. Well, what would that artist? Coming back to your example, no, you want teams around these people already. So you wouldn't be the ideal fund profile to invest in those artists. So there'd be probably somebody before you in the chain who would take up that mantle. So it's about identifying where in the growth and the evolution are these opportunities. And many opportunities are passed by because they don't fit within the investor profile, because they're too risky or not risky enough, or because they're in the wrong place or in the wrong sector. And sometimes there's nothing you can do. It doesn't matter if you're the best artist, nobody's going to, and I don't invest in artists, I'm not going to invest in you, sorry. And it's about finding that fit, as I mentioned at the beginning. It's about finding who fits with what profile of investor.
One last question: if I was a content creator and I have been working on a film, or I've been working on an album, or in some ways I'm a creator and I need to raise 50 to 100,000 euros to launch my project. Very quickly, what's the first place you would tell me to go, or tell this creator to go?
Ooh, maybe the Berklee School of Music. No, I'm actually halfway kidding, because a lot of people ask me that about where to go when you're very early stage, and I would, sort of replicate that. Universities are often underestimated. They're great circles of influence, even if you're not a student. It's really a place where just a lot of activity goes, and you need to start swimming in that sea. So in any I've been involved in 4 successful startups, and so I would apply the same thing to a content creator. Nobody's going to come knocking at your door if you stay at home. You need to go out there, and the best place to start is what's going on at the university locally, and also conferences. I would often volunteer that I'll be a panelist, I'll be a speaker, just to be able to go to the conferences for free. But then once you're there, to really work the room, and you will find people that are looking for you. It's like a dating game, and it's really finding that match. People are there for a reason. And if that's a world that you want to swim in, then you've got to swim in that world.
I would agree, and many of these opportunities that come up, investors, people that maybe are more experienced in the sector, who know about what you're doing, who can then back you. So many of the early backers are people who have made money from the same business, who see an opportunity in that business again, know it inside out, and are prepared to back you. And that's also an excellent profile of investor for the content creator. So often the early investors are people who are very familiar with the sector and who have made a bit of money from the sector, and then are prepared to back another entrepreneur, either because they like the sector and want to make a return, or because they want to support someone that's coming through behind them in the same business. We've seen that a few times in our portfolio.
We actually have a film and television team, and they say the same thing as I say. When they're asked about a new project that somebody brings to them, the first thing they say is, go and talk to an experienced producer, because that experienced producer will be able to source. If they think your idea has got merit, they will be able to source the funding. They'll be able to make it happen. The point is, you may have to give something away in return for that, but that's the nature of the beast. It's if you want your dream to materialize, you may have to give a little bit of the dream away to somebody. And what I always say to artists is that here are half a dozen really good managers, go and have a cup of coffee with one of them, and they will be able to tell you whether they think you've got the ability in the first place, and they think you've got the ability to do this, and if they do, then they will help you to achieve your dream. And I think that is the best thing you can say to anybody.
Are there any questions? We have a few minutes. Yes, over here.
I have a question about how do you feel about the appetite for acquisition? Oh, thank you. How do you feel about the appetite for acquisitions in the music industry with young startups who are, gaining traction, who are, making something happen, and the kind of big established names that exist? Do you see a lot of acquisitions happening? Is there a good atmosphere for that kind of thing compared to other industries?
I think it's improving rapidly. As I say, I think you can suddenly see some light at the end of the tunnel now. I think it's been a very dark few years. I love the independent sector, and I just think whether it's live or it's music or it's anything, I love the independents kicking the backsides of the majors, because I just think that the right young talent, given the right backing, can that the speed of thought, the speed of movement, the speed of change, is all in favour, I think, of the younger sector. And I think and people who haven't got the past history to worry them, and it does sit like a cloud over you sometimes. And I think the majors just, the inertia they've had over the last 10, 15, 20 years has been incredibly embarrassing for me. I do think there are lots of young entrepreneurs now, I think, who are going to get backed and are going to, and I think they are already. I think there are young managers in this game. There are young entrepreneurs coming through rapidly. So I think it's an incredibly exciting time.
Yeah.
Hi, and hello, Paul. I'm Vanessa, Director of PRS Foundation. Hi. So we got a mention earlier about our funding programme for emerging artists working in pop music. And I suppose we've got one observation and one question. This year, 50% of the Mercury Prize nominees have been funded by us in the past year. And there's, in my view, an incredible movement amongst artists to want to retain control of their rights, to have more independence, and they're coming to funders like us. And in the UK, in response to that, there have been many more trusts and foundations and the Arts Council and UKTI, who've been making funds available that are grants as opposed to loans or investment. So I suppose my question is, do you think there's going to be any kind of resistance from the artists themselves? I know we're talking about VCs here, but I just want to look at it from the artist's perspective and their teams.
I think what you have to be careful about is thinking about this being traditional VCs. I'm advocating this being a completely different way of working with people. Our funding, which we did in the 2007, 2011, was not VC funding. It was actually helping artists and keep the artist rights stayed with the artist. We simply put some money in and wanted a return on that. So we left the control very much with the artist or the label, whoever it was. So we didn't interfere in any way in the ownership of the rights. We kept the rights where they were. And I'm very keen going forward to try and establish that. I think there is a way now with artists to work going forward. What I want to do is to turn those artists, I think those artists who are on the radar now, to make them even more successful and to push them on to the next level where they can commercially. There's a huge vacuum in the music business for artists who are reaching that top level. And it's a problem we have in live enormously. Headliners are in very short supply. So there are lots of artists reaching a certain level. It's reaching the next level that is the real difficulty, to become the superstars of the future, and not all of them want to get there either. So you need to work out which are the ones that really have an ambition to go into the stratosphere and which ones are quite happy to end up at that sort of mid-tier range.
Others? Here's one. Second row. Yeah, you.
What you guys think of some of the management companies that are like investing in mobile and apps and technology? There's a company called Backstage that got $20 million in funding recently, and like Scooter Braun, who manages Justin Bieber and a bunch of other artists. Managers are becoming VCs. The guys that have Modest Management invested in the same company. But what do you think of the managers becoming VCs?
I think it's great. I mean, I wouldn't necessarily call them VCs per se, though. And I think I agree that things are very fluid right now, and there's certainly been a dearth of talent, certainly at an A-list level. And I think it's simply because it's just difficult for artists to make a living full time. And so I think it's great that, the more that a manager can invest not only time but funding and help the artists getting alternative sources of funding so that they can sustain themselves, the better. When I was at MTV, it was a very sort of a great ecosystem where everybody sort of won. And there was just a lot of content. We were the opening act for Pink Floyd, George Michael, Whitney Houston, Sting. It just was never-ending talent because it was an ecosystem that just was supported. And I think there were just as many ears, fans then as there are today. But how much they're willing to pay for the music has been a big issue. And so I think we're getting back to it. I agree that there's a way to kind of find a new ecosystem to keep that content going. But nonetheless, it's been challenging. So I think it's great that if a manager can help an artist get to a way that they can sustain themselves in terms of not only just making a living, but making a name and a reputation.
For my part, I think we were talking about young entrepreneurs, and I think Scooter Braun's absolutely the perfect example of somebody who is, taking this stuff to a new level. I think it's long overdue in terms of managers. I think managers historically looked at a very narrow. I'm Mr. 15, 20%, whatever the percentage is, and actually I think the forward-thinking managers now are taking artists and themselves to a new level, and I think more power to them. I think it's an incredibly exciting time. I think for that.
One experience I had with my company back in 2010, we got funding from a small round of funding from Madonna's manager Guy Oseary, and Ashton Kutcher. They invested like a tiny amount of money in our business, but the things that they were able to bring outside of just money was priceless. Just knowing those guys and their network, that was the value for us more so than the small bit of angel funding.
What is your company?
That company was called Mobile Roadie. We'd done mobile apps for the biggest artists in the world.
Yep.
Madonna was one of our first clients, and when we got Madonna as a client, it opened lots of doors for us. And that came via Guy Osiri.
Yep. I think you had a question in the front.
Thank you. I was going to suggest if you could make any comments about opportunities in technology or cultural markets, creative markets in other geographies. Let's say Asia, you have any visibility on what's happening there? Big markets, both from supply of content, consumption of content. I don't know if you have any visibility, you are interested or not. You can make any comments on what's happening in Asia, those parts.
Well, I actually was about to talk about the Hispanic market because I've been on a visit here. I was in Barcelona these past couple of days and meeting with entrepreneurs and fellow investors, and I kept bringing up the fact that that Spanish is the #2 most spoken language in the world. It's a huge market. And certainly being an Angelino in Los Angeles, where we're basically a bilingual town, and then you look everywhere down south, it's a huge, huge market. And rather than focusing on the Anglophone market, now all the Anglophone companies are looking more towards the Hispanic market, and everybody wants to be Carlos Slim. I think there are tremendous opportunities in music and other sectors, definitely.
And I think it manifests itself when we look at companies and VCs and how they build a portfolio. So, we have this sort of Tetris effect in Europe where you essentially are hoping to capture geographic areas with a particular business model, hoping that someone will look to fit that Tetris block into their business. And it happens quite a lot. Always looking to the US guy to come into Europe by this M&A process. And I think investors typically are very comfortable with investing companies close to their, let's say, known markets. So for European investors to jump straight into Asia is difficult. But obviously we would invest in a company looking to go there and take advantage of that opportunity, and we've seen that happen. But it's a different market. You have to. It's the way that it behaves, the way you perform well there is completely different for a European. And I would guess that applies across content, across apps, across whatever business model you pick. So it's about making sure that the team understands that and has their plan in place. Partnership is a very common way to get into some of the Asian markets. So it's about understanding what you're missing and how you can take it over there.
I think we're out of time. I want to thank my panelists, Paul, Blair, Monica.
Thank you.
Thank you guys for coming out.